Ladies and gentlemen, welcome to the Credit Suisse Asian Investment Conference. For those of you who have attended this conference previously, we're grateful you've returned. For those of you who are attending for the first time, I'm confident you'll find the conference to be a valuable opportunity to hear and meet with CEOs, politicians, and opinion leaders from Asia and around the world. This year, we have also resized the conference a bit in order to provide more opportunities for direct interaction and one-on-ones with the speakers and with CEOs and owners from Asian-based companies. In addition to these sessions with these CEOs and owners and many of our Credit Suisse colleagues, we will also be hearing from certain celebrated executives and former government officials. As you've seen on the screen, they include Jean-Claude Trichet, former president of the European Central Bank; Yukio Hatoyama, former Prime Minister of Japan; Larry Fink, CEO of BlackRock; Peter Thiel, one of the founders of PayPal; Jack Ma, Chairman and CEO of Alibaba Group; Glenn Hubbard, Dean of Columbia University's Business School and Chairman of the Council of Economic Advisors under George W. Bush. We hope you enjoy the Credit Suisse Conference, and we hope you leave with new investment ideas as well as a deeper, more nuanced understanding of the economic and market developments unfolding across the global economy, with a particular emphasis on Asia. I come to the conference with a special appreciation for the region. I had the good fortune to work here for over 15 years, from 1989 to 2004, during which time I lived in Japan, Singapore, Indonesia, and again in Singapore. I've returned frequently since leaving and will continue to be here on a regular basis in my role as Chief Executive Officer for Credit Suisse in Asia Pacific. Like all of you, I've observed the region's remarkable changes. Let me take a minute and share some statistics covering the last 10 years that I believe are pretty extraordinary. The average annual return of the MSCI Asia ex-Japan Index has been 15.6% over the last 10 years. This is a significant outperformance of the MSCI Global Index and the S&P 500, which has generated an annual return of 9.7% and 8.6% respectively. The size of China's economy has increased nearly 5 times per capita income and more than quadrupled. China's share of East Asia's trade has increased from 10% to 23%. During this same period, the U.S. share of trade in East Asia has declined from 23% to 10%, a complete reversal of fortune west to east. China's volume of trade has also grown, transforming it from the world's 6th largest trading nation into the largest trading nation in the world. Emblematic of this change, China is now the world's largest importer of oil, something that would have been unthinkable a decade ago. Throughout Asia, there's also been a dramatic increase in living standards. During nearly a decade-long period, which the World Bank has the most recent data, 420 million people have moved into the middle class. That's roughly the population of the European Union and approximately 100 million more than the entire population of the United States. Not since World War II have we seen such dramatic, sizable formation of household consumer spending potential, which will only accelerate over the next decade. We've also seen companies in non-Japan Asia become more dependent on global capital markets to finance their growth. Last year, companies in non-Japan Asia issued a record amount of bonds in US dollars and euros. And for the first time ever, the value of these bonds exceeded the value of what they borrowed via the traditional syndicated loan markets. This, too, is a dramatic change from a decade ago. Now, building on this progress, we will see and have seen in 2013 some very interesting themes and a very interesting start. In the first 2 months of the year, non-Japan Asia companies sold $32.8 billion of equity in the capital markets. This is more in any comparable period to start a year since record-keeping began in 1995. Also, in the first 2 months of the year, there has been $12.8 billion of high-yield bond issuance in Asia ex-Japan, which is 4 times the previous record for the comparable period and more than 3/4 of the total issuance we saw last year. There's also been dramatic change in Japan. The yen started the year at 77.5 to the dollar, now at 95.3 to the dollar. The Nikkei started the year at 10,688. It's now at 12,220, close to the highest level since 2008. The near-term and long-term progress we've seen across Asia is not mere happenstance. It grows out of a number of smart decisions made by economic and political leaders throughout the region. For starters, there has been a dramatic improvement in Asia's political climate. When I moved to Asia back in 1989, many of the economies were not democracies, but there's been much change. In fact, in 1998, which was the first time Credit Suisse had hosted the Asian Investment Conference, the theme was meeting the challenge. We were all in the midst of the worst economic crisis in recent Asian history. I was living in Jakarta with my family, and I remember street protesters ultimately driving President Suharto out of office and changing the political direction of Indonesia and creating the thriving democracy and economy we have in Indonesia today. Even now, once closed countries like Myanmar have opened up and embraced political liberalization. And countries like Singapore, Malaysia, Thailand, Philippines all participate in multi-party political democratic elections that now seem second nature. This is a big change from 15 years ago. These changes have helped create the conditions for elected officials to implement policies and foster greater economic growth and opportunity. And there are still some notable exceptions, but the trend and the momentum is clearly moving in the right direction. The economic climate has also improved as many countries throughout the region have demonstrated a commitment to fiscal discipline. Consider the contrast between Asia and the United States. Over the past 15 years, again, back to 1998, when the region's debt to GDP was 60%, the figures for the United States and the Eurozone at the same time were 65% and 72% respectively. Today, the ratio in emerging Asia has plunged to just 32% debt to GDP. While in the Eurozone, it has risen to 87%, and in the United States, it's almost doubled, 107%. We've also seen Asia's central banks fortify their foreign currency reserves and diversify out of gold and US dollars. China, for example, holds $3.3 trillion in reserves, up from 316 just 10 years ago. And Indonesia, my former residence, they bolster their reserves, which are currently 112 billion, up from less than 30 billion 10 years ago. The favorable indicators across Asia are also reason to be very optimistic about the region's future. The working age population of the ASEAN 7 countries, Indonesia, Malaysia, Philippines, Thailand, Singapore, Vietnam, and Myanmar, are not expected to peak until 2042. There are extremely large populations of young people that are the ones who represent tomorrow's consumers. With increased spending power, they will be buying everything from cars to household products, which will be the catalyst for continued growth of the middle class in these countries. India, for example, the median age of the population is just 28. In the United States, 37. In Japan, 44. India has close to ideal demographics. As the working age population in India expands, savings will increase, and that will become the source of funding for the investment that will boost the country's competitiveness. In 7 short years, by 2020, 7 short years, Asia's projected to account for more than half of the global middle class and will be 1.5 times larger than the combined middle classes of North America and Europe. In another 10 years, 2030, Asia-Pacific middle class will be 3 times larger than North America and Europe's middle classes combined. Now, of course, one of the keys to realizing this potential will be widespread literacy and quality education, where there has already been pretty extraordinary progress across the region. Now, the final factor I want to mention in the context of Asia's progress is regulation. On the financial front, regulation measures have been most successful in helping to contain credit at reasonable levels. Last year, for example, Indonesia imposed minimum down payments of 25 to 30% on mortgages, cars, motorcycle purchases. Very different from when I lived there. We've also seen many countries adopt regulations that are supportive of business creation and economic opportunity and abolish those regulations that stifle entrepreneurship. In the World Bank global rankings of economies based on the ease of doing business, 6 of the top 18 are in the Asia-Pacific region. Of course, number 1 and 2 are Singapore and Hong Kong. Korea is 8, Malaysia is 12, Taiwan is 16, and Thailand is 18. There's still a lot of room for improvement in some of the largest economies, but like many other indicators, the needle is clearly moving in the right direction. Ladies and gentlemen, in conclusion, attractive democratics, a growing middle class, political and regulatory environment that supports new business formation, and expanding and adapting capital markets are the primary reasons why I expect Asia to be a very attractive place to invest in the future and in the years ahead. These exciting developments will be the focus of our conference between now and Friday. You'll hear a lot about the region's economic prospects, its high-growth companies, as well as specific sectors and countries that are attractive for investment. It's going to be a very stimulating environment, I can assure you. I'm very enthusiastic myself about being here, having the opportunity to meet many of you, and hearing your thoughts on Asia and Asia's future. Thank you very much for coming to our conference. Enjoy the rest of your time here. It's now my pleasure to introduce Ali Naqvi, the head of our equities business in Asia Pacific. Ali, I'll turn it over to you. Thanks.